With yields unseen since the Great Recession, is it a good time to invest in US Treasuries? The last year has been the worst for bonds in hundreds of years, possibly the worst year ever. The bond market is something like 3 times the size of the stock market, and as yields have risen 8 times from a terminal rate of 0.25% to where we are now approaching 5%, it has been absolutely crushed. Today you can buy a 10-year Treasury note with a 4.08% yield, a 2-year with a 4.83% yield, and a 6-month Treasury bill is sitting at 5.1%. All the rave right now is in Treasuries. So are they a good investment? Well, as always, that depends on your own personal situation. So a financial advisor tailored to you is necessary to give you a specific answer. But here's my insight. Those yields I mentioned are as high as they've been in about 20 years, and a 4 to 5% rate is essentially default risk-free according to the US government. There are a few reasons why buying Treasuries may make sense. If you are an active investor who is a bear, and you think that rates will stay high for a long time, and stocks probably not do so well for the foreseeable future, then you could find a safe haven in Treasuries. The rationale is that with higher rates, the Treasuries are more attractive relative to the return stocks provide. And with a potential recession looming and an uncertain inflation outlook, we could see more downturns in stocks. Another reason that you may buy Treasuries is if you have cash that you don't need for the duration of the bill or note and want to earn more than the bank will give you, essentially giving up liquidity for a guaranteed return. A third reason is that you are elderly or can't take the risk and want to invest in an instrument that the government guarantees from default that has a high enough return to warrant an investment. It is a calculation specific to each retiree. So again, I can't tell you if it makes sense. It depends on how much you have to invest and how much you need to live on for the next few years.